of that. So call it, 12,000-ish, to 15,000-ish, are in that prestige category. And so we're at 2,500 out of this 12 to 15,000 group. Now, I'm sure not all of this prestige category is going to lean in with us, but you are still early in the penetration of that market. And we believe that sort of, prestige category of roughly a third does more than 50% of the volume. So we feel like we're kind of where the high returns can be too.
So to be clear, it doesn't look like an expansion beyond the prestige audience is in the cards anytime soon, or if it does happen, it would be when you have Daxi in the portfolio. Is that a fair way to think about it?
Yeah, I mean, first off, we get a lot of questions around, can you define prestige? And since it's
Sure.
not a clear way to define it, we are making some assumptions. Like if you said, how many plastic surgery practices are there? That's an easy one. Prestige, we've sort of defined as those accounts who aren't necessarily competing or have a strategy that's based on discounting and advertising of price. It's more, hey, we're focused at high end. We don't necessarily lean on price because people come to us for other reasons. So could that number, edge up over time because people sort of recognize that's a strategy they want to embrace maybe. But I think it's fair in your point, given that we're only at 2,500 out of this 12 to 15,000, and the fact that we're driving sort of the penetration that we're looking for, I wouldn't see a near-term departure from that. Obviously, once our neurotoxin's approved and how that's going, we'll continue to evaluate this.
Okay. I wanted to ask a near-term focus question. The holiday season is always strong for facial injectables. So I wanted to get your view on the potential for significant uptick in RHA growth in the fourth quarter, given those dynamics. How do you think about that?
Yeah, well, historically, Q4 is seasonally a very strong quarter, right? We talked about Q3 being a seasonally down quarter. So yeah, we would expect that given how robust the facial injectable market has been, that Q4 will be a good market for everyone, and us included.
Yep.
I will say that, for some companies, given that it's year end, and given that they tend to do a fair bit of couponing and discounting, there can be some little of a mismatch between product that's purchased and actually gets used because of the year-end incentives to drive behavior. We've not chosen that strategy. Ours has really been focused on more the quality of the product and less around buy this because we're couponing and discounting. So I think the market's going to continue to be robust. We would expect Q4 to be healthy. But our strategy is not to sort of drive consumption by aggressive couponing and discounting. And so I think there's some puts and takes there.
Yep. That makes sense. And then looking into 2022, I mean, the filler market, the facial injectable market overall has been pretty robust. Even amid the pandemic, we've seen quite a snapback. I don't even know if snapback is the right word to me, because it never really fell off in a big way in 2020. But as we move further away from the pandemic, how do you look at the trajectory of the filler market in 2022?
Yeah, well, again, we're dealing with a smaller slice of the pie than certainly some of our bigger competitors. But everything that we're seeing from the market research data that we're looking at, and what we're hearing from our peers in the space, is that this continues to be a very healthy market, growing at sort of high single, low digits, which is where it was before. And so I think we've probably worked through some of the pent up demand. But I think we're seeing that just overall the market is robust and healthy. And I think it's a combination of some new people engaging, this whole new Zoom environment where people are looking at themselves all day and are electing to, try one of these things. And just a growth with older people wanting to retain the best version of themselves, younger people kind of engaging early in the treatment. So I think it's going to continue to be a healthy market going forward for everyone.
Yeah. Okay. Now, I know in Europe, you've talked about the share for RHA over there. I think it's about 10% or so, if I'm not mistaken. What's your expectation about what you can realistically accomplish in terms of share in the United States? And maybe with that, also speak to some of the dynamics that are unique to the US filler market relative to Europe.
Yeah, so I think when we licensed in the RHA filler line, we talked at that point that their share in the top 5 EU markets was around 9%. And that given they don't have a neuromodulator to partner with it, they've built that really on the quality of the product. It's possible it's drifted up to 10% now. And so we've sort of long viewed that as a good target for us to sort of say if that's what they can do in Europe without a neuromodulator, certainly, with a neuromodulator, we would hope we could do at least that or better. I don't think we're prepared to give sort of additional color around that and get into the guidance side of it. But, if you look at where we're tracking right now, we launched in a pandemic. We hired our whole 100-person sales force in a pandemic. We don't have a neuromodulator product in the market yet. And based on our Q3 revenue, if you annualize that in $1.1 billion US market, we're tracking pretty well in year one of the launch, particularly given sort of our target strategy. So I think we're very hopeful that we can do better than that. And certainly once we get our neuromodulator approved, I think that we'll have an ability to challenge, competitors and accounts where the bundle right now, is a little bit of a deterrent to use. So, you asked the question about, what are the competitive dynamics in Europe and how do those match in the US? Well, given the higher regulatory hurdles in the US, there's far fewer competitors. And so in Europe, there's a lot more competitors, particularly some coming out of Asia that come into the market. So there's a low-end price segment, and there's just a lot more product and competitors. So we don't have that. And given sort of the healthy pricing in the US, that's encouraging on that side of it. We don't have the full suite of products that RHA and Teoxane has in Europe, but what we do have, we think, is sufficient to cover the full range of what they want, particularly once we get RHA 1 approved. So again, I think you balance it in the US, fewer competitors, fewer choice, which certainly will help us. But maybe not as many products in our bag that sort of a Teoxane has, but on par, we really like sort of where we're positioned in the market.
Okay. I wanted to touch on DAXI and therapeutic settings. And I know we have just a couple minutes left, so maybe I'll just ask a quick question on cervical dystonia. So I know you have the safety data in hand, and the filing timeline is something that you've been clear about. But I guess the question here is, how does the CRL factor into your filing timeline in cervical dystonia? I know it's a different division, the FDA, but how do you think about that?
Yeah, I think we've long viewed that the best way to get CD approval is as an sBLA to the approval of the primary application. And that continues to be the case, obviously, coming out of the Type A meeting. If there's something meaningfully different that causes us to revisit that, I guess that's possible. But right now, we think that's the most expeditious and straightforward way to get approval is filing a supplemental BLA on the heels of approval of our glabellar lines BLA.
Okay. And how are you thinking about the build out of commercial infrastructure for DAXI in therapeutic settings, particularly in CD? I know there's a lot of prescriber overlap between CD and ULS, so I'm going to lump in ULS and CD. But how are you thinking about that? And what would be your headcount needs to the extent you move forward with that?
Yeah, we've long talked about sort of going direct in the US with the field force of kind of 30 to 60. That was our sort of pre-pandemic guidance. I think since then, we've looked at sort of what's evolved in the market. I think given some of the remote tools and engagement, we think that there's probably ways to be a little bit more efficient from a Salesforce standpoint and invest a little bit more in sort of MSLs and other programs to efficiently launch this. And so, it's probably lower on the sales headcount side and a little bit more on the back office reimbursement support. CD and ULS, there's a lot of overlap. So we're talking a fairly targeted sales effort on CD. There's a pretty good overlap with ULS. And so once ULS gets approved, we would increase the commercial organization some, but given the amount of overlap, it's a 10 to 20% type of increase, not, a whole nother sales force.
And then real quick, in other therapeutic settings like migraine, and there could be others. And I realize that you've got the CRL, but let's just assume, eventually you get an approval. How are you thinking about, migraine or other therapeutic areas?
Yeah, well, I mean, I think we've long felt like, this is the kind of gift that keeps giving, right? If you look at sort of the long time that Botox and other of these products have been on the market, they've got good long life to them as you open up new indications. And I think given the consistency of our performance across both aesthetics and therapeutics, we want to continue to open up more market opportunities. So CD, ULS. Then we'll look at, do we go to lower limb spasticity? We've long talked about the migraine market as being great. So it's always for us been not an if, but a when. And
Yeah.
it'll just be a capital allocation where we'll continue to unlock additional therapeutic indications, and we'll rank them: market size, risk of trial, time to market, competitive dynamics. And we'll sort of continue to evaluate that against other, capital priorities.
Okay. And then last question, I wanted to ask about capital deployment and M&A. And, it's a sort of the question is under the umbrella of, in a perfect world where you have an approved DAXI and, and things are kind of moving along with the business, what other areas in medical aesthetics would be of interest to Revance?
Well, we've tried to break them down by sector, because each time you move into a new category, you're talking about adding another sales force, partly because of the call point and everything else. So facial injectables to us is a good core area. So the primary would be, are there other things that we can put into the bag of our facial injectable team that makes sense, that you can rationalize so that we get more leverage? Once you start moving out beyond that, you look at breast, skincare, capital equipment, others, or something new and differentiated. Do you see something interested on the cellulite side of it or other things? But again, we're going to continue to have a bias towards, let's figure out where we get leverage and concentration with our existing sales force. We also like that category because of the market size, the gross margin profile, the competitive dynamics, but that's it. And we'll take that same sort of thought process into therapeutics. So when you look at CD, ULS, neurology, are there ways, like we did with HintMD, to create some critical mass around sort of our core assets to drive more efficiency and greater growth?
Okay. Well, that just about wraps it up. I think we were able to cover a lot, so I really appreciate your time, Mark and Toby, and thanks for doing this. And for those of you who listened in, I hope you found this helpful and informative, and that'll wrap things up. So thanks again.
Great. Thanks so much for having us.
Thanks, David.